And I am going to welcome you all today to the AgriSompo North America Edge presentation of today's December WASDE report. Sterling Smith is with us, and he is going to lead us into today's results as we watch how the market reacts to the report as it is presented live here in about 14 minutes. We are not expecting a whole lot of craziness, but with the way everything's going, we just never know. In that chat box, you are welcome to leave us any questions or comments. We are happy to answer any questions we can and get those answered for you as soon as possible. So without any further ado, I am going to pass the ball over to Sterling and let him just kind of take it away. There you go, Sterling.
And good morning, and thank you for joining us this morning. Again, the December WASDE report usually doesn't bring any big surprises, but we never know, so that's why we have to pay attention. One thing we did have this morning, though, is we did have a CONAB production report coming out of Brazil. And if we look at my screen here, corn production from CONAB is estimated to be 117 million tons. The street was looking for 118.72. Their last report was 116.71. So we did see a little bit of an increase in production. And something I'd like to remind everybody about CONAB reports, typically they tend to be a little late in seeing production spikes. So very often we see these numbers grow higher, and this 117 number is a considerably larger number than what we saw last time around. Moving on to soybeans, estimated production is 142.79 million tons. That's versus last month's estimate at 142 million tons. The street was looking for 144 million tons. Soybeans in particular, we very often see these reports. The crop tends to get bigger and bigger as we move along with soybeans. And that's something, again, that we need to keep in mind here when we get to January and February. These CONAB reports are going to get to be a lot more important, and this number could obviously potentially get higher. If you wanted to take a look just here at this corn production number here, we can put up a chart here real quick of this, and we can see this is last year's. Here, let me make a nice big chart for you here. That's a little slow, a little small here. If we make a big chart of this, we can see where last year's production was. As you can see, we had a big dip. We were at 85. So 85 million tons versus, to make the math easy, we'll call it 120. That's 35 million tons more corn that's going to be put into the marketplace. So this is something that could be a bit of an ongoing concern. And as you can see, Brazilian corn production in general, we go all the way back here to 2005. They only produced 34 million tons back then. So as you can see, they've nearly tripled their corn production. And here, if we take a look at soybean production versus last year for Brazil, not so many problems here, not so much. But this is an even more interesting chart to show you just how things have really developed and changed in Brazil. If we move this back, you can see, looking towards last year's number, we came in right around 124, which again, we're looking at, an additional potential 20 million tons of soybeans getting produced. And if we go all the way back here, we'll just take this back to 2000 to make life a little bit easier. 2000, they produced 50 million tons. So they've not quite tripled production of soybeans in the last 20 years, which is really one of the big things, and this has been driven mostly by China and things, China investment into Brazil, and this has certainly pushed up their production, and the USDA has ideas that this number is going to get noticeably larger. We did also have export sales this morning, and as you can see here for corn, they came in at 1.13 million tons, which was a really good week. And for the first time in a very long time, we did see China coming in. They did buy a couple 100,000 tons of corn. This is the first purchase that we've seen really all year. So that's some good news. If you're wondering about the big flash sales that we had this week, we saw 1.1 million tons of new crop corn going to Mexico and another 700,000 odd tons for next year going to Mexico. Those will not be reflected in this report. That will be reflected in next week's report. And part of the reason the market didn't react to this is seasonally Mexico, right around this time of year, usually a week or two before Christmas, they come in and they make a massive purchase of corn. So this was not anything that was really unexpected. Soybeans at 1.6 was a little bit better than expected. And I've noticed a bit of an uptick in export inspections, which is obviously a precursor to things actually getting exported. And it looks like things, at least for the moment, we are seeing a bit of improvement going on there. And export sales for wheat last week was terrible. We only saw a 75 print. This week we did a little bit better, but I have noticed that exports have been slow, inspections have been slow, and unless we start to see some sort of market improvement here, I mean, part of this is ports being busy with beans, but some of it is the high wheat prices, which is kind of taming our export picture. And this is something that could certainly have an effect on wheat prices going forward. The numbers for cotton were outstanding. We saw a big uptick from last week in cotton exports. While they're not as big and as great as they were last year, we are still holding along about the second best level ever. So things are moving along really rather nicely. Moving on to today's WASDE, a couple of things that we're going to be looking at here. Corn ending stocks. This is our leftovers. This is the biggest driver of price. Last month, the number came in at 1.493 million. The street is looking for a little bit of a cut here. We're looking at 1.47 million bushels. A lot of analysts, myself included, I don't think they're going to change the number. I think there's a long-standing track record in the December report of things not getting changed. With that being said, we're going to be doing another one of these in January, and that is going to be a pivotal report. That is going to be something that is going to set the tone for how old crop behaves until we move on to new crop in May. So that January report is going to be very important. Along with it, we're going to have a quarterly stocks number, which the last time we got some pretty good surprises out of that, particularly for soybeans, where we saw ending stocks get pushed up noticeably, and that had a material effect on the market. Soybeans right now, the last report, we were at 340. The street is looking for 354 million bushels. And again, will they change it? Won't they change it? The track record has been any changes have either been very, very small, either a small cut or a small increase. And typically, what drives this is not a change in the production numbers. The January report will be the benchmark for production numbers, but sometimes we can see a change in crush numbers. Sometimes we can see a little bit of a change in exports. Right now, I'm fairly neutral. I mean, there is some market buzz about maybe seeing a little increase in exports, but likely that will be offset by a distinct probability that we could see production numbers increased. Wheat, we're looking at 583 million bushels for ending stocks. The street is looking for this report to come in. Again, very little change, around 589. Wheat exports, particularly the last 6 weeks, have been lagging a little bit. And this is a spot where, again, maybe we could see a surprise in wheat. I'm getting more and more concerned about the wheat market every day. I've noticed that wheat prices here, and I'll punch those up here for wheat in Chicago here real quick. We'll take a real quick look at that. But as you can see, March wheat is down again today. And if we look at the chart, we've seen wheat prices have been steadily moving lower. And, you know, we failed underneath $9, and now we can't even hold an 8 handle in here. And a lot of this is the Minneapolis Wheat is doing okay, but there's some ideas that we have priced ourselves out of the market a little bit. And this weakness in wheat very often can spill over and turn into weakness in corn. This can lead to some fund selling and things of that sort. which could be a little bit of a problem going forward. If we look at Minneapolis wheat has really done pretty well here, and it continues to hold $10 a bushel very, very stubbornly. And that's good. But the thing that strikes me the most about this chart is the stuff has stopped going up, meaning the market seems to have reached an area of pretty good comfort here. We're not going to be looking at any big surprises in terms of supply, certainly not for the next 3 or 4 months. So there is a hunt for quality wheat, and that is something that is certainly pushing and supporting the Minneapolis wheat. If we were to see something happen here with the big fund position, there's about 15,000 contracts owned in a market that's really pretty small. You can see here open interest for the front month is only 48,000 contracts. If we were to see a problem in here, this could lead to a problem in the other two in the Kansas City and Chicago wheat, and that in turn could put some pressure on everything. And looking at soybeans coming into the report here. Soybeans are a little bit lower, but they have erased early losses. And the soybean market has really been pretty sideways to a little bit lower. And the market is comfortable here right now. We are seeing exports meeting, not grossly exceeding expectations, but exports have been good. And that is keeping this market reasonably well supported. Now, one of the things that's been supportive of this, these are soybean crush margins. And we have seen good exports of soybean meal. The export report for them today, again, was very good. And as you can see here, crush margins have come off noticeably. If they come down too much more, this good crush demand that we've been seeing may very well start to dry up a little bit, especially as bean supplies in the U.S. start to get tight, as we're now getting just beyond harvest and we're in prime export season. If we see these back off a little bit, that could be one problem that I see for the soybean market, along with obviously where are we going to be with Brazilian production and where are we with Brazilian weather. So we're about two minutes out from the report here right now. Market's also going to be looking at these global numbers fairly closely to see if the USDA bumps them up at all for corn and soybeans based on what they're seeing in Brazil. Those first numbers that I gave you for Brazil were done by the Brazilian agency, which has a fair amount of credibility. It's certainly more credible than any data we get out of, say, China. But again, it's something, they are not the USDA. So we watch those numbers closely, but again, the market will probably take any changes in the global numbers fairly seriously. Christy, did we have any questions?
Nope, I was just checking that actually. We haven't had any questions yet. Do you want to remind you that you can put any questions in that chat box or in the Q&A? Be happy to answer those as we go. We have, looks like, less than 60 seconds before that report goes live. So if you don't have any questions, you are welcome to put those in there even after the report comes out. And I will also put our email address in there that you can leave. You can send us a question afterwards, and we will respond to those even later this afternoon.
And for those of you watching the screen here, you can see this is the survey number. This is what the street thinks is going to happen. The center column is the number that's going to populate as soon as the report is released. And this is last month's report. So the market's probably going to be looking a little bit at the street estimate, but it's also going to really be paying attention if there are any big deviations in ending stocks from the last report. And here we are. We are about 15 seconds from release. And go. And corn, 1.493, sharply unchanged. Soybeans, 3.4, also sharply unchanged here as well. Let's take a look at the total wheat numbers. Total wheat ending stocks, 598. They did push those up a little bit. The yield was not changed, so that tells me they probably bumped down exports a little bit. Cotton came in at 3.40, again, right in line with expectations. They actually raised cotton production a little bit, so we could view that number as being a little bit bearish. And let's see how the world numbers came out. Soybean ending stocks came in at 102. The street was looking for 104. The last time it was 104. So that is a number that should help out the soybean market just a little bit here. And soybean production at 382, they shaved production back a little bit. That obviously did not come from the United States. So that tells us that world production is still a little bit under what they're estimating. So that puts that number pretty much in line with what our friends at CONAB had. Wheat ending stocks pushed up a little bit higher, so at 278, we did see a little bit of a gain there, and that is something that is probably going to be viewed not so favorably by the market. World cotton ending stocks were cut just a little bit, so that 1 million cut there might be a little bit beneficial. Cotton production was basically left unchanged. So how is the market reacting to this? We'll be getting some quotes here momentarily. Right now, wheat is down about 12.5 cents, which is pretty much about where it was trading beforehand. Soybeans are trading at, here, let's see. Unfortunately, my quote system is delayed, so I'm running a little bit behind. But again, these numbers are not anything that should get the market really rattled or cause any sort of big movements within the market. And so, if I'm going to sum up this report, I would sum it up in as completely as expected, with absolutely no big surprises coming into the market here, and nothing really that I would think would be too shaky. So I don't think we're going to see a lot of big movement or a lot of excitement coming out of this. Now, we've had a lot of outside market interference running the last 2 weeks. Tomorrow we have a big number coming out. We have the CPI number, and right now the street is looking for 6.8% on that. That's up from 6.2% that came out last month. And if that number should overshoot by anything, should print 7 or higher, we're probably going to have a pretty rough day for the outside markets, and that has a habit of spilling over into these markets, particularly if we get crude oil moving quite a little bit. Soybeans are 12.56 3/4. They are currently down 4 1/4 on the March contract, so virtually no change. We were trading about 6 cents below lower prior to that. And looking at May soybeans, they are currently down about 4 1/4 as well. Soy meal not really moving on this either. It's currently up about $1, and that's about where it was changing with the report. So again, we don't have a lot of big surprises here. Soybean oil is sharply lower today. That's down $1.58. That is something that's been helping those crush margins. And with the noticeable weakness we've had in crude oil, that is something that can certainly create some pressure. Another thing about the wheat market that I've noticed here, spring wheat is currently trading about 7.5 higher on the nearby December contracts. The March contracts are starting to lose a little bit, and that is something that I would find to be a little bit concerning about this report in its entirety. So, Christy, did we have any additional questions about what's going on with this report? Again, the report was completely as expected, with no big lurking surprises in it whatsoever.
We do have one question. How do you think weather could influence the wheat market this winter and spring, mainly Kansas City wheat? Okay,
this is something that if you're not getting my daily reports, make sure you're signed up for them. I talk about the drought monitor in here every Thursday when we get the new one. We are seeing continued and expanding drought throughout the southern plains. Texas, Oklahoma, Arkansas, all that area, moving all the way up into parts of western Kansas. And I did notice that has gotten more problematic, and that's something that could create some speculative interest in the market at some point, and that could be beneficial. One thing I'd like to caution about wheat, it's tough. It is really tough, and if we get some timely rains or a change in this pattern, that will certainly be something that will, obviously improve and help the crops, and could be a negative for price if we build in some risk premium. So right now, if I had to pick one weather concern for the market for the United States right at this moment, that is the biggest one, and frankly, really my main concern. I have a secondary concern, and I don't want to get people too excited here. It's going to be 55 degrees in Omaha today, and then we're going to get some sort of fractional snow business tomorrow night. On Wednesday, December 15th, it is going to be 71 degrees here, and that is not normal. It is incredibly dry here. We're running dew points in the single digits. This is going to need to change at some point, or we could be looking at a pretty serious problem coming into spring. Again, this is a long way in the future, and this is something that obviously can change, but we do have a full-scale La Nina in place, and typically that means drier weather for the Midwest, particularly running from here all the way to Chicago. So this is something we need to keep an eye on, but this is something to change. The other thing that I would be concerned about with the weather right now is obviously South America, and while we have the La Nina, the current weather flow patterns there are bringing moisture into South America, particularly in the northern growing regions. So we are doing just fine with that. We haven't seen a lot of changes. The southern areas of Brazil are having some problems, and that could affect their total production numbers a little bit. But as the way things stand right now, the weather in South America is not that big of a problem, and we're right at crunch time. Unless that weather changes really in the next 4 weeks, we're going to be in a situation where these ideas that CONAB and the USDA have about Brazilian production are going to be really pretty accurate, and we're going to be looking at strong production.
That was a great segue there, Sterling, because one of the questions that just came in was if there was any update on South American soybean crop, how that might be looking. So is the weather affecting that?
Well, it's affecting it a teeny tiny bit. Right now, we're looking at 142 million tons getting produced. This is the most recent CONAB number. This came out this morning, actually. So it's a little bit under street estimates, but it was a little bit better than last time around. So right now, I would have to say the weather is not really affecting soybean production at all, and production is going to be, as things stand right now, very solid. And again, the other big concern here is obviously the corn. They did raise, it didn't meet street estimates, but they did raise corn production. So we're not seeing weather difficulties really developing down there. And at some point, probably not right here during the holidays, but when we start getting around that January report, which is going to be pivotal, the market's confidence about what's going to be coming out of South America is going to change one way or the other. And they're going to become very confident, I think, that we're going to see very good production, and those soybeans and that corn will be entering the export corridor. And that's one of the reasons why we haven't seen purchases of any great magnitude from China. If China loses confidence or feels they need to buy corn, most likely they're going to be buying it in the next 4 to 6 weeks. That's been their pattern the last couple of years, not unlike Mexico's big purchase that they made earlier this week.
Gotcha. We did just have a comment that came in from somebody here in North Dakota, said their local weather person put a presentation on today and said that there's a 70% chance of below normal precipitation next year for North Dakota.
That sounds fairly reasonable. And if we see a La Nina pattern, which it's kind of like Groundhog Day with the weather, meaning we're seeing weather that looks a lot like last year at this point in time, and what I've been able to pick up from my meteorologists that I talk to every week, I don't necessarily disagree with that estimate at all. If we are still having those same estimates 60 days from now, I would say the probability is that you could probably take that to the bank, and that would be something particularly for spring wheat that would be beneficial for price. Something else we need to think about, farm costs, obviously, they're all over the news. I don't need to tell anybody here that we're looking at escalating fertilizer prices. If we find a situation where we begin to under-fertilize a little bit, that would tend to enhance the effects of any bad weather, and that's something that could be supportive for prices. But again, when we're having this conversation in March, it could be a very different conversation.
Okay, I just, looks like you've answered some of the other questions that have come in that were on the question side. There was a, what direction, one of the questions said, what direction is this market going? I think you might have answered that, given the lack of overall.
Given for today, it's not going, this is not going to have any influence on it because it basically came in as expected. So there may be a little bit of dancing around and a little bit of volatility. In general, the markets are looking for the next set of news. We're seeing soybean prices have been flat and really haven't been able to develop much going either way. We don't have a big fund position in soybeans, so there's not a lot there to drive it down. We would need to see some pretty solid bullish news coming out of South America in order to really prompt them to start buying, or we would need to see a big uptick in global demand, which global demand for soybeans has been good. It's certainly been supportive and hasn't been a problem. I don't foresee any problems. The Chinese hog herd is rebuilding nicely. We've seen very good demand for soybeans and soybean meal, in particular out of Europe, which is supportive. So as long as we can avoid any ASFs or anything like that, I think we're looking at a situation where soybean demand will be solid, but it's not going to be enough of an increase unless China really starts doing something with their hog herd to really push it higher. So again, if we're going to get a surprise or something that's going to move the market, it's probably going to have to come from the supply side.
I do want to read you this next question. You definitely touched on it here. I wanted to know if there was any thought on those fertilizer prices and if you think they will have an impact on the upcoming growing season. Of course, we know that they will, but do you think the lack of fertilizer will impact the yields?
A lack of fertilizer can definitely impact yields. And if it comes in combination with weather problems, it could have a very large material effect. And as fertilizer, as we know, natural gas prices, which I'll punch those up real quick here, are a big driver of where fertilizer prices will be going in the future. We look at natural gas prices. They've collapsed. The situation in Europe has eased noticeably, and that's taken a lot of pressure off this market. Now, global macro concerns once again. What happens with the Ukraine could have an effect here if we end up having to export more natural gas into Europe for some reason, if there were to be an increase of issues there or possibly a conflict. So that's my one worry. Right now, maybe we can see fertilizer prices ease up as we come into the spring. Don't count on them dropping as much as natural gas prices have dropped, though. With the prices going up right when they did, it went up at the most inopportune time. This was right when fertilizer producers are gearing up. It's right when consumers and consumer natural gas companies are putting in their hedges to buy gas. So they ended up buying much more expensive gas, and prices have fallen apart, in part due to the weather that I've talked about. So we can probably be looking at maybe potentially some lower prices, but they will not be as materially lower as natural gas prices have dropped currently. Kind of think of it like unleaded gas at the pump. Crude oil has dropped noticeably. Unleaded prices have come down 30, 40 cents a gallon. The gas price at the pump here has gone down about 9 cents. And if we continue to see volatility in the market, that will prevent those prices from going lower, simply because the retailer, one, he has a lot of very expensive gas in the pipeline, and he has to work his way through that. And when prices are volatile, typically retail prices don't drop as quickly and as easily as if prices drop and become stable. And the same is true for fertilizer. And really any commodity that's moving through a supply chain.
Mm-hmm. Well, I've just checked everything, and I'm not seeing any other questions. We have reached 15 minutes past the reports. We still have a lot of participants on those, so if you guys have any other questions, we would love to answer those for you. Feel free to put those in here, or you are welcome to send those to us at marketinginfo@sompointernational.com, or put those into the chat box right now or the Q&A. We'd be happy to answer those. This has been recorded, and we will put this in an upcoming email that we will be sending out. It will also be on our YouTube page. Be happy to get that out to you if you would like to have this for your producers so they can see what Sterling has had to say. Do want to make sure that you know we have a marketing meeting coming up next Thursday at 9 o'clock, and Sterling will be presenting on that as well, along with Brooks York and Mike Toohill. And they will be discussing what's going on as we gear up for this spring sale season. We also have that pivotal WASDE and January report that's going to be coming out in January. So we want to make sure that you watch to sign up for that meeting as well. So Sterling, any parting words before we sign off here?
Yeah, I will put a very quick review of today's WASDE in today's export newsletter. Also, make sure to read tomorrow's Friday Afternoon Marketing Club, as I'll be talking about inflation quite directly, as we will be getting that big CPI number tomorrow.
Sounds good. Well, thank you all again so much for joining us today, and we look forward to meeting with you again next week, and like I said, for that big meeting next month. So, yes, Autumn, I will send you that link for next month, or for next week's marketing meeting. We will get that out here right away. So that will be sent via email. And it will also, we'll try to get that in the export email that Sterling sends out today as well. So, all right. Thank you all so much. Have a wonderful day. Oh, next week, make sure you wear your ugly sweaters. We want to see those ugly sweaters next week. Sterling's got a good one, I think.
Oh, I've got a classic, and I may go out this weekend and see if I can find, you know, another one that is particularly interesting. We'll use that.
You all have a great day. Be safe out there. Take care.